Hi, and welcome to Alpha Wolf Trading. I'm Tim, and I want to thank you first off for stopping by and taking a minute to see what we're all about. If you hang around to the end of this thing, I guarantee I will provide you with one free technical lesson that you will be able to apply to any stock you're looking at and help you determine whether or not it is a position that you want to get involved in. Okay, so stick around to the end and you get that free technical lesson. This is, I think, take 4,862. I'm trying to do this video and keep it under 10 minutes, right? Or right around 10 minutes. I get carried away when I start talking about stocks. So here we go. Dashboard, as a member, everything I post, whether that be an article about a company that maybe I'm involved in, and I know other members are involved in, post articles, morning prep, right? I'll put out a little thing about stocks that I see moving and why. Zoom link from the live trading room. The live trading room, sometimes it's just me. Sometimes there's a bunch of people in there. People have full-time jobs. They don't want to sit in front of the computer all day. I get it. But I'm typically there from an hour before the open until close to the close, okay? Anybody has a question about anything, they pop in, they ask. Maybe we chat for a little bit, they pop out, right? But I'm usually there, unless I am at a virtual conference hunting for new opportunities. So sometimes I do go to other conferences, and when I've got those going on, I'm not in the room. So Discord. Also have a Discord room where I post a lot of the news releases that I think are interesting. It could be about stocks. It could be about the Fed. It could be, who knows, right? Anything that I find compelling that the members might want to read, I put in the Discord room. So we got the Discord room, the live Zoom room, and then anytime I take a trade, you get a notification. You sign up for either text or email or both, but you get a notification anytime I take a trade. You get a notification anytime I put out a trade plan, right? A trade plan goes out, you get notified. So basically, that's your dashboard, and that's going to let you know everything I've got going on, right? The next thing we're going to take a look at here is the blog. Some of these are for just anybody, right, that wants to watch it, and then others are for membership only. Recently, what I started doing, so I used to just do the CEO interviews one-on-one on my own, and then I would go out and, I would put together the trade plan, and I would write my thesis up and send it out to the members. What I've recently started doing is interviewing and recording the interviews with the CEOs of the companies. So the intent behind this is actually twofold. Number one, for the members to hear the questions that I ask over and over and over and over again. And why, right? So why are those things important to me? So the questions that I ask, and then also I want the members to understand the leadership, get a feel for the leadership, feel their passion for their company, the vision, right? And the strategic plan that they have to execute the vision, right? And I want them to hear that all from the CEO. I want them to get a feel for the person. And that is the reason that I'm starting to do and record the interviews. So I give the members 1 week to watch the video, absorb it, and then take whatever action they're going to take. And then I push the video out to social. Why do I do that? Well, because if I'm invested in the company and I like the story, I feel as though I'm part owner. And as part owner, I want to help the company succeed. I want them to grow. And I want to get the story out there. So that's why I push it to social. Okay? But the members have it for a full week before it goes to social. All right? I want to make it very clear. I do not get paid to do any kind of write-up or any kind of video or interview with any of these companies. This is not a paid promotion. This is strictly me liking the company, potentially being part owner, and sharing the story. No other hidden agenda other than that. Okay? All right. So, and by the way, I have a boatload of interviews that are going to be coming up throughout the end of the year, and I'm booked solid into first part of next year, and I'm going to have a bunch more coming behind that. So it's going to be fun. I'm going to have a whole lot of interviews for the members to watch. Now, moving on. There's also a video library of educational videos, dominant trend, tools of trade, support resistant, risk reward, right? Those are there for the members. About 10 hours worth of videos, probably more than that actually. I used to do trade reviews and market recaps and market pre-morning preps. It was too much. It was overload. It was overload for me. It was overload for the members. I trimmed them back. I don't do them anymore. But I kept the videos there so that people, if they want to go back, because the process hasn't changed all that much. So they're still there for you to go and watch. And then there's also the stocks to watch videos. That whole library is always there for you to check out anytime you like. Then there's also a workbook, 65-page workbook, go through fundamentals as well as technical setups, psychology, trading psychology, and a lot of different stuff in there. That's also available. Okay, I think the most important thing, though, that we provide is trade plans. What is a trade plan? Well, it's when I find a company that I find interesting, I will put together a summary. I'll put together a thesis as to why I like it. I may attach their investor deck, right? So that you can look at the investor deck. And this typically happens after I meet the company at one of these conventions or whatever. I put together a trade plan. Long, 2,000 shares. That's my ideal size. The position entry $2. I have to put a hard number in there, but it could be in a zone. $1.80 to $2, somewhere in that zone. I'd probably take my starter position. Starter position could be 200 shares. If I think that the sector is maybe looking a little weak, or the market's acting a little funky, and I think maybe the stock's had a nice run and it could pull back, I would much rather add on areas of potential support. That is how I build into my position. It says 140 for a stop. That may not be my stop. That might actually be the next area where I would look to add, okay, to build out my 2,000 share position. So I start with 200 shares. Maybe it gets down to $1.40. I add 800 shares. What does that do? Brings my dollar cost average down, and it increases my risk reward ratio, okay? Now, let's see. Yeah. All right. So that is the strategy with the pending trade plans. Am I going to take all of these pending trade plans? Probably not. I'm going to miss entries on some of them. Some of them are going to run without me. And some of them, as I'm doing my due diligence, I might find out, you know what, I'm not that crazy about this company anymore. Maybe there's too much debt. Maybe I'm not real impressed with the management or the leadership, right? So that could change entirely. And when that happens, I let everybody know, hey, I'm not that interested in this story anymore, and I drop it. Okay, then I've got the actives. Now, here's what's important about the actives. For example, this one here. I've already locked my profit in this stock, but I haven't closed it all out. I still hold shares. Those are what I consider lotto shares, okay? So, for example, my entry was $1.69. I bought 500 shares, and that was actually all I was looking to go long in this thing. So I bought 500 shares right out of the gate. My first target was $3. Well, I sold some shares at $3.16, 200, right? The second target was 5, but when it hit 5, it was acting very strong. There was no sign of any kind of weakness in the stock, so I didn't sell any shares. I just held them. I did recently sell some at $7.88, so well above my target of $5, but I still hold shares. And I'm going to continue to hold shares because this could go to $20, right? And I might sell off another 100 shares and hold the last 50 and see if it goes to 40. All right. So the trade doesn't get closed, even though I've locked the profit. It hasn't gotten closed, and it really hasn't been. I mean, it's been recognized, but it hasn't closed out the trade. Okay, it's not a completed trade plan yet. So that's something to keep in mind. Then let's go to the closed out plans, completed plans. So as you can see, now this means I am completely out of the trade, right? I have sold every share. That doesn't mean that I haven't gotten back into the stock, though, with a different trade plan. For example, fun, this, I traded this, I got completely out. I sold all the shares, made 98% on the trade. But then I started another trade plan. And that one actually, I think my dollar cost average was 89 cents. And it ran to 24, right? I sold some at 20, sold some at 14, 11, 6, right? But I still hold shares. Why? Well, because the dollar cost average was 89 cents. And I happen to like the company, and I happen to like management. And do I think it's going back down to 89 cents? I don't. I think it's probably going to hang around somewhere between $2.50 and $3. Right? So that dollar cost average is a great entry point. And at some point, I might add at $2.50, for example, and that's going to bring my dollar cost average down. Or it's going to bring it up, actually. It's going to bring it up, but that's okay, right? I'm okay with that. $2.50, I have, shares left at 89 cents. I buy the $2.50 shares, and actually my dollar cost average is going to be lower than that, right? So I can't close out the trade, but here's what I do. Every time I close out a trade, I give myself a grade, right? And this is the whole point of Alpha Wolf Trading. I want to teach you how to hunt for opportunities. I want to teach you how to put together a trade plan, right? And know your plan before you enter the trade. Know where you're going to take profits. There's no point in buying a stock and having it go up if you're not going to lock profits and you don't know where you're going to lock profits. Right? So you have to have that plan in mind, and then you lock the profits, right? So the whole point is hunt, find, put together a plan, and execute. That is what Alpha Wolf Trading is all about. I want to help people be consistently profitable as investors, okay? That's my number one goal. My number two goal, help companies succeed. Good companies that I think have good products or services, good leadership. I want to help them succeed. Why? Because they're people. Ultimately, companies are people, and I want to help them succeed. And I'm part owner, right? All right. That is the whole purpose of Alpha Wolf Trading. And one more thing here, I'm just going to show you one other thing. I try to be as transparent and as real as possible. Dolphin, 241%, 0.67%. I should be A plus, baby. No, C. Get myself a C. Why? I did not manage this trade well. Number one, I didn't have enough shares. Number two, I could have added, because it actually pulled back down to an entry level that I wanted to add shares at, and I missed it. And then I just managed I didn't do my due diligence on the company fast enough either. So there were three things that I really wasn't happy with this trade, even though it was a 241% gain. I'm going to be transparent, right? So I'm not happy with the results of the trade. I mean, I'm happy, but I'm not happy. Right? And that's it. That is what Alpha Wolf Trading is all about. So look, if you want to become a member of Alpha Wolf, I am so excited to get to know you, and I'm excited for you to get to know me. And hopefully I can teach you how to be consistently profitable. One other thing though, and we'll point this out. This is not a day trading service. I'm not going to be calling out, hey, I'm in and out. It's not going to happen. This is about investing or swing trading with very clear, concise plans. And I want everyone to understand that these returns, they didn't happen overnight. They didn't happen in a week or a month. And sometimes they don't happen right away. Sometimes it takes a lot longer than I anticipate because sometimes it's Wall Street's slow to move. Companies don't get recognized right away, even though good news comes out, right? So make no mistake, this is all about patience. This is all about patience, conviction, and having a plan. That's it. So look, if this is something that interests you, you want to become a member, I can't wait to get to know you. If this is not for you, totally cool. I wish you the best of luck in life. Have a nice life. And that's it, right? Okay, give me a minute and I will be back for the lesson, technical lesson. All right? Have a good night, everybody. Okay, everybody, as promised, here is your technical lesson that you can apply to any stock you're considering either investing in or trading. You can use this on any time frame, but when it comes to investing, this is what I want you to pay very close attention to. Before you go jumping into a stock that somebody tells you to buy, take a look at the long-term time frame. And what I mean by that is either a daily, weekly, or monthly chart. Okay? And what you're looking for is the trend. Now, once you do this a few times, it's very visible to the naked eye. Okay? And you're going to get really good at noticing what's the trend. So let's take a look at this stock, for example. Okay? This is a weekly time frame. And what you can see here is that from 2016, this stock has been in a downtrend. Okay? And it has, in a downtrend, is just really a series of lower highs and lower lows. Okay? So this is the dominant downtrend. Now, a lot of times, day traders or very short-term traders, they don't even look at this window. They're looking at maybe a 15-minute, 5-minute, and a 1-minute time frame. And they're looking at the candles within that time frame. Okay? It's easy as a trader to get stuck in the time window that you are trading in, okay? So when you're considering investing in something, you want to make sure that you're not investing in a stock that is in a big time downtrend for multiple years, unless you have a very, very compelling reason as to why this trend might end. Right? So that's what we're going to talk about here is the trend. So right now, from 2016 to 2020, it's in a downtrend. They have a really good reason as to why you're going to put your money there. Okay? All right. Now, let's move forward in time. Well, actually, before I do that, I want to show you something else. Now, that's moving forward in time. But see how spotty this chart is? This is a very sloppy chart. And it's because it's a very thinly traded stock. And that's part of the problem with getting involved with OTC and low-price stocks. Sometimes there's just no volume. You can buy as many shares as you want, okay? But when it comes time to sell, there's nobody there to buy them. So you could have this big move, but if there's nobody there to buy them, it's very difficult to get out of this trade if you've got any size, okay? Especially if it's in a downtrend. Just keep that in mind. So when you see a chart like this, it's a tough chart to build any kind of position into, right? Because there's just not enough volume. I think the highest volume day maybe it had was about 283,000 shares, and that's just not an impressive volume day. Okay, now let's move forward. Let's see, right before 2021, something occurred that changed a multi-year trend. Now, if you can identify maybe a fundamental catalyst that could change the trajectory of a stock, and you can catch it at that trend reversal, and that's what this is called, a trend reversal. When it's a dominant long-term trend and you take that trend out, that is extremely powerful. Because just like that downward trend lasted for years, the new upward trend can also last for years. Okay? Give you an example. I bought a stock, APPS, at, I think it was 89 cents, 80 something cents. Stock went to $100. Okay? Now, I didn't sell right at the top at $100. Actually, I think I sold my last year's at about $48. And then the day after I sold them, like 3 analysts came out and put a $75 price target on the stock. Now, there were no analysts looking at that stock at 89 cents. At $48, they were putting a target of 75, right? Which really pissed me off that I missed that one day. But anyway, still happy with the trade. But it went to $100, okay, from 48. And that's what I mean by when a trend reverses, when you get a new trend, it can be very, very, very powerful, okay? So trend reversals are a big thing. And the longer the time frame, the more dominant the trend. So if you're stuck in a window trading 15, 5, and 1 minute window, you're not looking at the long-term trend, right? And in the 15-minute window, you're thinking, man, we should be breaking out. Well, if you back it up and you look at the longer term, you're going to see maybe that there's a big area of resistance right there, and that's why it's not punching through, okay? It could have multi-year resistance at that level. So always look at the longer time frame and always identify what trend is it in, okay, before you go getting involved in the stock. Why do you want to park your money in a stock that is in a long-term downtrend? That's number one. The only other thing to keep an eye on, too, is volume, right? So what you're going to see here, now remember I said the biggest volume day the thing had was like 280,000 shares, right? 1.4 million shares is the volume day here. Now what you're looking for with volume, when a stock, a lot of times you'll see a big volume day, stock will pop, and then what happens, right? Like look back here. See this? You had a volume pop for like 3 days in a row. Stock took off, got a little extended, and then what happened? Volume dried up and pulled back, okay? That's like a consolidation period. What's happening is somebody is building a position. They just don't want to drive the stock to the moon. So, they take a position and then they let the stock cool. And they might even sell shares, right, to help it cool down. They sell some shares, and then when it gets back down to a level where they want to start adding again, they start adding, right? That's why you get this kind of stair step up, right? Because whoever's building the position does not want to drive this thing to the moon. So keep that in mind. Paying very close attention to volume. Volume is often an indicator that something's changed and somebody's trying to build a position, okay? It works both ways. You get a big surge in volume to the downside, somebody's unloading, right? Could be a big fund that's trying to get out of the position. They're not going to be able to sell all their shares. They're going to have to do it in chunks. So, they sell it, You get a big spike down in the price, and then you get this bounce back because you've got all these people that are like, oh man, it's gotten too far, it's gone down too far. And they start loading up. And then boom, another big volume sell-off comes in, right? And that's the beginning of a new trend down. So let's just take a look at a couple of examples. So Zoom, right? Big winner from the COVID. So what do you see here? It was in an uptrend, right? And it was in a very gradual uptrend. But then what happened? The stock went parabolic. Now we're in the daily time frame, okay? Stock went kind of parabolic. Actually got way overextended. And then it came back down, and what did it do? It tested this trend. And when it broke the trend, this became a broken stock, okay? Sometimes you'll pierce it, and then you'll get right back above it, and you'll close the day above that trend. You didn't break the trend. It's still intact. You pierced it. You tested it. But by the end of the day, you closed above it. When you close below it, trend is now being broken, okay? So what happens? You break the trend. You get little bounces, right? Like right here. You get this little run. Now that for a short-term trader, this could be a great opportunity, right? This was at a level of potential price support where it found a little support, it bounced, they had a nice little run, but look what happened. It came back up into this trend, and that became resistance, and then it fell again. So you're getting a series of lower lows and lower highs, right? Now, let's go to the weekly time frame, right? This is actually starting to put in what looks like a bear flag. This right here, this pattern, right? On the weekly time frame. So there's nothing in this chart that is indicating to me that the downtrend is over, right? As a matter of fact, this was probably one of this area right here, right around 254, 250 was, a pretty good area of potential support, and it broke right through it, right? So where's the next area where you see congestion and potentially any area of support? And that could be somewhere down around 158, 150, 160, somewhere in that area, right? It's still got some downward. Possibly. Let's take a look at another example. Zillow, right? Having some problems. They got into flipping houses. Same thing here. It was in an uptrend. Okay? It got kind of parabolic. Look at how far away it got from the 200-week moving average, right? It went parabolic. It turned around. Let's look. So another one, real quick. We're on the weekly time frame. What is that? That is a bear flag below the 200-week moving average. The 200-week moving average is going to act as resistance. And if this thing breaks down, where is the next area of support? It's sitting at $58 right now. I could see potentially some support, maybe right around $38, right? There's nothing in this chart that's indicating to me that the downward trend is over, okay? Let's look at it on the daily, right? So this was actually a big gap down. Gaps in charts often fill. They don't have to fill, but they often do. This could go back up, fill the gap, but if it goes up and fills the gap, guess what? It's still going to be underneath the downward trend. So you might get a gap fill for a short-term trade, but then it's going to hit this resistance of this trend line, and it's going to come right back down and maybe go back down and make a new lower low. What could happen also is you go up, you fill the gap, you hit the trend line, you come back down, you test this recent low, and you hold, right? Maybe you pierce it, you don't close below it, you hold, and then maybe you get what's called the double bottom, and this actually starts to rise back up, and maybe it can break through that trend line. But right now, broken stock, right? Broken stock. So let's take a look at like APPL, Apple, right? Recently, things, it's on a big move, right? Daily. Now, what's interesting about this is this actually kind of traded within a box. It traded sideways. It built up some consolidation. It based a bit. But look at what's happening here. Now, remember I was talking about the 200-week moving average. Look at the 200-day moving average, right? This is a big, big stock with a lot of shares outstanding. When you see this kind of move in this size market cap stock, this is getting a little bit parabolic. And I'm not trying to be an Apple basher, so please don't send me like nasty emails because I said something bad about Apple. Bottom line is it's getting overdone to the upside, right? What my concern is with the overall markets in general is that, we're struggling. I'm seeing signs of distribution in some of the stocks that were very hot. Then you got the big cap stocks that are kind of going parabolic. What's going to happen? If these things pull back, right, the markets are going to pull back harder because the weighting that these stocks have within the S&P 500 and the different indexes, right, the Dow, when these things pull, the market's going to pull, and it's going to look ugly, right? And that's concerning to me. At some point, I think these things get overdone, and I think they come back. And they're starting to get to that parabolic phase where they're getting a bit far away from the 200-day moving average. Now, they can consolidate, go sideways, and let that 200-day come back up to them. But, I would be taking profits in these names, right, that have had these huge runs and now are starting to go a little bit parabolic. So, let's see what else. Take a look at, trying to think. Oh, Peloton. PLTN, right? Look at this thing. Went from basically $30 to 170. Did the same thing. It got very far away from the 200-day moving average. It was in an uptrend. It was holding it. And then it came down and it broke that uptrend. And then it came to the other side of the uptrend to try and get back above it. And it failed. So then it started making a series of lower highs and lower lows. And now you just had what? Big gap down, right? Volume is increasing. Dried up a little bit, it's bouncing a little bit, but is there anything in this chart that is telling me that the selling is overdone? Nothing. Maybe it gets a bounce. I mean, this is an area of potential price support. If you come back here, you look way over here. This is an area of potential price support, right? Maybe you get a bounce. Maybe you get the gap fill. You're still probably going to have some resistance at that trend line, right? As of right now, as a long-term investment, this would be a very risky play, right? So that is the lesson. And you can apply this to any stock, right? What's the long-term downtrend? Long-term downtrend, the longer the trend, the more dominant the trend. So you could be looking at an hourly or a day, 5-day chart, and it could look like the stock is in an uptrend. And it isn't an uptrend, it's a downtrend, right? So you have to always go back and look at the longer term time frame because that is the dominant trend. And then if you're looking at a potential trend reversal, if you're thinking that there is maybe a catalyst that could turn this around, I'm not saying don't dip your toe. You can dip your toe. Just understand what the trend is, right? And if the catalyst that you think is going to work creates that trend reversal, you could be onto something very, very powerful that you can hold for years, right? that now is going from the lower left to the upper right. So first thing I look at anytime I'm looking at any stock is the chart. And what I'm looking for is there any hint of a potential setup or turnaround, right? I want to go into the trade with both eyes wide open, knowing that, hey, this thing is in a downtrend. And if it doesn't crack this area, it's going to stay in a downtrend. Okay? So that's it. Identify the trend in the longer time frame. Pay attention to volume, right? Somebody's trying to build a position in the stock. You get a big volume spike. You get a pop in the stock, and then you get a drop in volume, right? Because they don't want to drive it to the moon. Drop in volume, pulls back, and then you get another volume spike, right? Somebody's building a position. It's telling you something, so pay attention to volume. All right, that is your free lesson. And if you become a member, great. If you don't, that's cool. I hope this was worth something to you. And that's it. Enjoy your evening, and I'll see you around, I'm sure. All right.